The Apex Bank, central bank governors from the Intergovernmental Authority on Development region are proposing a harmonization of remittances policies to promote trade and deepen financial markets. According to experts, the region has one of the highest, by the way, remittance costs in the world. Stands at 8.9% compared, if you do a comparative analysis, to the global average of 6.5%, which is nearly 3 times the Sustainable Development Goals target rate of below 3%.
Diaspora remittance has become a major economic driver in Africa, with World Bank saying that in 2022, remittances to low and middle-income countries grew by an estimated 5% to hit $626 billion. Despite the immense growth in the last 10 years, high transaction costs and a complicated transfer process are stifling growth. The World Bank says the average cost of remitting $200 to sub-Saharan Africa was 7.8% in 2022 compared to global average for low and middle-income countries.
This means that it costs more for us to send money among ourselves than it costs for our diaspora brothers and sisters to send to us.
Central bank governors from the region are meeting in Nairobi for 2 days to discuss various ways of lowering intra-regional transaction costs. The governors say persons transferring funds across borders rely on a network of banks to coordinate the transactions, which in many cases must go through a more liquid currency, increasing vulnerability to exchange rate fluctuations.
When no criminal activity is involved, informal channels mean that governments don't have the true picture of foreign currencies flowing into or out of their own countries. This often makes the balance of payments appear less favorable than it actually is and lowers sovereign credit rates in some instances.
The bankers say the region lacks a common policy on standards for key payment technologies, among other challenges. The delegates also opine that harmonization of remittance policies will lead to lower cost of sending money and increased transparency and accountability in the remittance market.
But the point here is that we have to harmonize on the basis of best practices. So we should not be having a race to the bottom. So think of minimum standards. The minimum standards have to be best practices. It cannot be the standard of the weakest, of the worst, of the weakest jurisdiction. It has to be the best practice.
At the national level, development of national strategies, strengthening of financial sectors, capacity building to relevant factors, administrative and legal reforms if needed.
Digital remittances could be the gateway product suite of responsive, gender-smart remittances that could be a way to tailor financial services, and that could build resilience for migrants and their families.
The central bankers are expected to develop a roadmap on how to lower remittance costs in the region and boost intra-regional transactions. Trevor Ngendo for Prime Edition.
A lot of